Good morning, fam. Good morning. I hope you're having a great day. Whenever you're watching this, you may be watching this now, you may be watching it later, another day, another week, another month, another year. The point is that whenever you are watching this is when this video was meant for you to be watched, right? So there is a reason why you're here. There is a reason why you're actually watching this content, and I don't know that reason, right? But whatever that reason is, I hope that this video helps you, even if it's to get 1% closer to your goal, 1% closer to what you want to do. I hope that this video becomes that tool, and of course, if it can become a higher percentage of that, I'll be even happier. But honestly, 1% closer, that will make me happy. So listen, today we are talking about, we're going over the Candlestick Trading Bible, right? We're continuing the topic, and we are on the engulfing bar candlestick pattern. That's the topic. And let me actually show my screen. Trading the engulfing bar with trend lines. We have already gone over these three different ones, and this is where we're at right now, trading the engulfing bar with trend lines, and that's on page 122. So we're gonna go straight there right now. Right now, page 122. And again, as I'm going there, ask questions. Don't be shy. I don't know everything, right? Like, for example, yesterday, I didn't know how to use the Fibonacci, the Fib, right? The Fibonacci tool, Fibonacci retracement tool. But if you guys ever want me to go deeper into something I don't know, I could always research it. I could always come back. Of course, obviously the knowledge is out there. So, now, right away, I haven't even read this yet, but right away, if you remember, with trend lines, we're connecting all of this high, like swing highs, all of these wicks, like the highest points, we're connecting them. You see that? 1, 2, 3, we're connecting all those high points, and that's creating a trend line. So even without reading this, you could already see the engulfing bar. This is something that we have been going over. Now, the interesting thing is that I've always said, and I will still look at it that way, but I've always said that the engulfing bar has to completely cover the previous candle, from top to bottom. But look at this. The book doesn't really even have, you see that high, the high of both candles. The second one is not completely covering that, but this second candle is definitely bigger than the first one. Now, technically, based on the book, that's an engulfing candle, so I can't say it's wrong. Now, I would prefer this second candle completely covering that first one. That will be my preference. I want to put that out there. That will be my preference. But this one is just, almost double the size, almost. So that's what it's doing. It's engulfing it, and as we could see, it's bringing, the market down after that. So let's read it. Let's read it. And okay, and good morning, by the way. I hope y'all feeling great right now. So we're getting closer to the weekend. Today's Thursday. This weekend I'll be in Miami. I cannot wait for that. About to have my Cuban coffee in my favorite spots over there. Let's continue. Trendlines give traders an idea about the psychology of the market, especially the psychology between buyers and sellers. Moreover, it allows professional traders to determine whether the market is pessimistic or optimistic. This technical trading tool is used in different ways, either as support and resistance by drawing them horizontally, or to identify the price, or to identify price in time by drawing trend lines vertically. There is no wrong way in using trend lines. Again, there is no wrong way in using trend lines. In trending markets, we use hold on real quick. Hold on. Hey, my man's on Star Island. Yeah, I'm gonna be checking out properties on Star Island. That's where I'm gonna go. Hold on real quick. My son just woke up. What happened, puppy? Okay, hold on real quick. Okay, yep. Let's check out some properties on Star Island. You know, who knows what's gonna happen, you know, from here to 6 months. So yes, there is no wrong way in using trend lines. In trending markets, we simply use trend lines to highlight a trend by connecting swing highs or swing lows. Remember, you're connecting the swing highs, or you will connect all of the swing lows together. And yep, in price. This way helps us find high probability entry setups in line with the general trend of the market, and it shows us, you know, this chart right here. So let's see actually how many. Okay, only 2 pages to go. That's perfect, because we're gonna go through this like hold on.
You don't know if your next trade will be a winner or a loser.
Hold on real quick, let me just answer a quick message.
You'll start to see the probabilities play out. The problem, he says, is that most traders approach the market as if each trade is an isolated event with no connection to the past or future. They place a trade and immediately start hoping for a win. And when they lose, they're disappointed because they expected the trade to go a certain way. But that expectation is the enemy of rational thinking.
Okay,
Douglas urges traders.
so okay, we already went through the first one. Let's continue here.
They should approach every trade as just
By connecting the extreme highs, we had a trend line that acted as a resistance level. So by connecting all of these swing highs, we had a resistance level, and the formation of the engulfing bar pattern shows a good selling opportunity. We got this engulfing bar, right? And that's a great selling opportunity. Now, there is another engulfing bar right here. Why didn't they show that one? Well, like the trend line is forming. So here, and technically you can enter right here at the close, but you know, the trend line is forming. So you want at least 2 to like 3 contacts. So this is the third one. You know, that's a little bit more, like it's more high, like the probability goes higher. It's high probability, like on that third plus contact. So if you use oh, Vashi, good morning Vashi. Let me read the comments. Pat Riley, I'm on video 21, but I'm gonna rewatch it because it's the supply and demand one, and I kind of didn't get it, but I'm finishing the course today for sure. Okay, yes, and let me know, bro. Let me we could set up a time. I'm not gonna, well, you know, after tomorrow I won't be available, but today I think I'll have at least some time today, like later today in the evening. So let me know if you want to, like, definitely watch it again. If you still have questions, let me know. If not, we could meet next week too. So, but it is the bigger part of the course. I mean, this is the part that it's, and I tried my best to explain it, but it still takes practice. Like even me explaining it, I could do the best job, but still go to the chart and practice it, because it does take practice. It does take practice. I'll say that. So the formation of the engulfing bar pattern shows a good selling opportunity. If you use just a and I'm sorry, hold on. I think what I'll do is, for on Sunday, I'm gonna give out another homework. The homework is gonna be to identify supply and demand zones. That's for everybody that, you know, that's like going through the course or went through the course. Everybody that's new to the server, because I know that part, like at first you're gonna need confirmation. So I'll do that too, to like help everybody going through it. So if you use just horizontal support and resistance, hold on, let me see. By connecting, I did that, right? Okay. If you use just horizontal support and resistance levels, you will miss this profitable trade. Learning about how to draw trend lines is never a bad idea. You see that? That's never a bad idea, like knowing how to draw them, because it is the simplest analytic tool that you can use to analyze financial markets. It works in all markets: futures, forex, crypto, like options, all that stuff, whether it is forex, commodities, futures, or options. And look, here they're connecting the swing lows, and on the third one, you see how they went on the third one? They had the engulfing bar, boom. And you see this one is a simple strategy, but just because it's simple doesn't mean it doesn't work. You could back test it, forward test it, gather your data, gather over 100 trades and see what happens. So yeah, same thing, just an engulfing bar on that third contact here on the trend line. Yep. And the chart above shows a bullish trend. The trend line acts as what? As a support level. The price action signal that occurred created a great buying opportunity. And okay, that's it for this section. We're actually just gonna practice this together. Let's practice. That's all we're gonna do here. So first, and I'm gonna disable my indicators for now. Let's have a clean chart. So first, all we have to do is just find like this swing lows that connect together. We're not even going to go for the engulfing bar yet. Let's just do things step by step. So first, you're looking for like this swing lows, connecting them together. So boom, right here. And I'll try to get it closer. Here, this is a trend line on the downside. So we have, and yes, I could get it. So it's only touching the wicks. 1, 2, 3, 4. This one is not touching it perfectly, but we could even just get it right on it. That's okay. It doesn't have to be perfect, right? So 1 rejection, 2, 3, 4, 5, 6. So those are the, the swing points. I'll say this, look, not even looking for an engulfing bar yet. Look at this. Number one, we have a bullish pin bar. On that bullish pin bar, look at this. Right under. Boom. That's a you at least get your 1-to-1 here. At least 1-to-1. It goes a little bit over, but that's a 1-to-1 just on that one. So all the things we have learned is like that bullish pin bar, you could back test it, gather your data, see if it works, more than not. Now, do we have an engulfing bar? I don't see one here. I see a morning star, but this morning star did not do anything here. You see morning star, a bearish pattern, doji or small candle, and then a bullish candle that closes above, either at the halfway point or above, but it didn't keep going up. Not there. Nope. So not here, and that's, you see, you're not always gonna get it. With this book and any book for that matter, you're not always gonna get everywhere what this is showing you. Let me read the comments. So Vashi Santana says, yeah, I have a few questions already written down, so I'll send you a message on Discord to see if you have time for a one-on-one tomorrow. If not, I'll wait until next week. Okay, yeah, I mean, tomorrow is probably gonna have to be early, because I'm still debating if we're leaving tomorrow or if we're leaving Saturday. But if it's just go through it, it doesn't matter. We don't have to rush it. If I could do tomorrow, I'll do tomorrow, but we'll coordinate it. Okay, let's actually look at another spot. You know what? If I was to do a trend line up here, it will have to connect. It will have to connect the high points. This here, it will connect more points. And of course, you have candles that go outside of that. That's okay. But I don't see. Let me see. I don't see any here. So let's continue. I'm showing you how to do this in real time. I'm on the 5-minute chart. You could do this on the higher time frames. I'm just showing you the process. That's it. How I will go about practicing this, spotting, this engulfing bars with the trend line. So here, of course, these ones are not touching the trend line, but we have at least 1.2, and then it just diminishes here. So I mean, we do have this engulfing candle. Look at this. It didn't touch the trend, but it got close to it. You see the distance between, you see the trend line, and this candle was minimized. Then we got the engulfing bar, and look at what happened. These are things that you should backtest. Like, does it have to touch the trend line? Well, look at the data. How many times is this happening? Was there a buying opportunity here? Oh, look, let's look at the break of the previous candle. That's a 1 to 2 plus. 1 to 2 plus right there. You see, didn't have to touch it. Now, the thing is that you wouldn't know this price action here. So let's just say, as this was happening, you're probably doing something like this, right? Because of course, at this point, we don't have all these other candles. So technically, the trend line really would be, I mean, it would be developing. It will be developing like this, goes down, rejection, boom. But how likely are we to really catch that? That's another question. I don't think, that's as easy to catch in the moment, but we're back testing. We'll continue here. Let's look for another spot. Okay, we have a downtrend here. See, I'm just going from like the wicks, and I'm kind of like seeing where they connect. So I'm just gonna go from here to here. Of course, this crossed that trend, came back. So is there an engulfing bar? That's the next question. You draw that line. Is there an engulfing bar somewhere? This should be acting as support, but nothing clean here. This is why you have to practice, because in the real market, you're not always gonna get stuff how this is showing us. And even here is not perfect. Yeah, even there is not perfect, but let's check here. We're gonna get it closer. Boom. Right there. Is there an engulfing? You see what I'm doing? No, step number 1, draw the trend line. Step number 2, you gotta ask yourself, is there an engulfing bar? That's step number 2. Well, I'm not seeing engulfing bars that easy, but I am seeing the bullish pin bars. Now, look at this with the bullish pin bars. You draw that, right? You put the long position tool right there. Stop loss right under. That's going at least a 1 to 1, and I think I saw a few. A doji here, a long leg doji. 1 to 3, 1 to 3 risk reward, but this one, I mean, the low is lower, the high doesn't surpass it. It's bigger than it. You can, I mean, based on the book, you can consider that an engulfing bar. I wouldn't. I want to see the whole thing like wrapped inside of it. Like, is this at least making sense? Like, it's really 2 steps. Step number 1, draw the trend line. Step number 2, just find an engulfing bar in that trend line. And in the like right now, as the market is developing, obviously you wouldn't see the full picture. So I went to the current time by clicking right here on reset chart. I went to the recent time, and all I did was this. I just all I do is just connect all of those swing lows. Now, doing that, is there an opportunity here? Well, hold on. The opportunity passed us by, right? Well, I mean, I wouldn't get in right now. I don't see an engulfing bar, but look, this is strong. Look at that, the bullish pin bar. Bullish pin bar is killing it here. That's a 1-to-1, right? I mean 1-to-1 plus. More than that, we're seeing that bullish pin bar gives us a 1-to-1 at least. You see that? So what I would do here as I backtest is I would just wait to see when the market comes back, and if we see an engulfing bar. That's it. That's what I would do there. And if we connect the top, the top is like, it's like closing in. So when you see this, most likely at some point there might be a breakout out of this channel. It's like a channel here that at some point it looks like it's going to do this. This is a bonus material. Like, this is like a plus. As this closes in, boom, you get like a breakout here. You'll get like a large candle at some point breaking out of this funnel, this channel. So yeah, that's it. Questions. This lesson is not, it's not like hard, right? It's just about practicing, because everything here can make you money. It can, but you have to practice. It's not just gonna come. Like, you gotta practice, you gotta get on the chart, you have to look for this. Look at that. That's already kind of like breaking out. And even for us, like with supply and demand, if we get for example, a demand setup around these trend lines, you see, those are great opportunities, because these trend lines are acting as support. So you get a trend line of support tapping into a demand zone, boom, that's a confirmation that that a demand zone is like, you're good to take it. Now this one is low probability, doesn't have a gap right in front of the zone here. From the first candle to the third, there is no gap. So yeah, this will be low probability, but using the trend, it could still work. Now I wouldn't say don't get in the habit of getting into this type of trades. But that's really all it is. Any questions, any comments? Let me know. This is the time for that. Yeah, back testing is mental, but it definitely helps see things much quicker. And that's why I do it. Like, and I mean, Vasher, you're right about that. That's mainly why I do it, because I want my eyes to be trained. Like, I want my eyes to just see things on the charts and not just see one thing, but just see the whole story. Like, be able to read that story, that chapter. Like, I want my eyes to be able to do that. So with back testing, that's really what you're training. You're training your ability to spot things on the charts. Like, you want your eyes to just be able to see. Like, for example, because of back testing, like, I'm able to see market structure here. My eyes right away look for these big pushes. They look for supply and demand zones, right? Support and resistance. Right now, even though I don't use the trend lines as much, I'm connecting the dots. So when your eyes are able to just see that, it becomes much easier to just see where we're at in that story. That's really what it is. That's really what it is. So show 3 quick demand areas and 3 supplies area in general. So look at this big push. This right here becomes demand, right? That push becomes demand. And right here we start a demand zone at the previous opposite candle, opposite colored candle. So we start with that. If this is green, we start with a red candle, and we just go from top to bottom. That's it. Now here I'm not getting into the specifics if it's high probability or low probability, just the demand and supply zones. This right here is a demand zone. If this candle was actually lower, like the low was lower, we just bring this down. but that will still be a demand zone. Why is it a demand zone? Because there is demand in this area, like at this area right here. You see all the buyers stepped in, or the big buy orders, they stepped in right there. So hold on, let me do this. Okay. Okay, so that's one demand zone. You're looking for that push, and you start with the, with the other color. Hold on, let me sign in. Makes me sign in sometimes. Well, almost every morning at some point, randomly. Okay, that's one demand zone. That's one. You see that? Big push. The other color candle. Boom. That's the zone. I look for another one. Right away, look at this. Like, my eyes are first looking for that push. Are there zones here? Yeah, there's the supply zone right here. Supply. So 1 and 1. One demand, one supply. This is a supply zone right here, and I'm on the 5-minute time frame. That's a supply zone. Why? Look at that push. Big push. Where did the zone start? At that green candle. If the push is made by a red candle, we draw the zone with a green candle. So from top to bottom. And if this red candle was higher, like if it was like this, then we would just bring this up. Just to, wrap that up. Boom, that would be a supply zone. So we got 1 and 1. 1 and 1. Another supply zone. Now, you do want a big push. So there is supply here. I'm going to skip it because I want to see a bigger push. But look, this is demand right here. So we're 1 and 1. One supply, one demand. This is 2, the second demand. Look at this demand right here. You see, there is demand. It's a lot of buying going on right here. Where did that buying start? It started down here. You see that red candle? And remember what I said, if that candle that pushes out, if it goes lower, you see, like I didn't go like this. I didn't draw the zone like this. Hold on. Let me do it here. I didn't draw the zone like that. Okay, it's not perfect, but you get the point. I didn't draw it like that. Why? Because this is the push. So you got to include the candle of the push. So you go down, boom, right there. Look at that. When the market came back into that demand zone, look, like I don't make this up. When the market came back, and I'm not saying this, it's just in general, like it came back, actually it came back here, tap, consolidated a little bit, but it did not invalidate it. You see that? Like even if you had, boom, stop loss right under the zone. Look at that. That went at least for a 1 to 2. So the market respected that demand zone. So we have 2 demand zones, 1 supply. Let's see if we get, whatever comes first. It's okay. I'm not. Another demand zone right here. This one, actually, this was yesterday. Yeah. And I was talking about this on Discord. Like, look at this. Let's go to Discord. I was actually highlighting this. Look, this that we're looking at, it actually created a bunch of demand zones. 1, 2, 3, 4, 5. So this right here gives us 5, like 5 right away. 1, 2, 3, 4, 5, and most of them won, and including this last one. So that's this. Look at this. We have demand here, demand here. Now these pushes are not that big, so am I saying they're quality? Not necessarily. I mean, even if we go like this, but the zones are being created. Nevertheless, the zones are being created. So I had 1 demand zone, 2 demand zone. I might as well get the third one since they're all here. So look at this. I'm just gonna get this one only because it's just a little bit more clear. But I mean, again, there's a few demand zones here, but there is definitely one here. Look at this. So push out of the zone. There is even a push out of that zone. That's another one. This one was invalidated. This one on top was invalidated. The market came into this one and then it reacted. You would have still not lost on this on top, because the market invalidated the zone before it gave us the break of the candle. So, you know, this one went 1 to 2. 1 to 2 risk to reward right there. So that's the third demand zone. We need two more supplies. But yeah, back-to-back engulfing candles too. Yep, I see that. Yeah, that's happening here. That's happening here. So this was an interesting way that the oil market was moving yesterday. Like I was mad because I'm like, I wish this price action was there in the morning session, but it didn't happen until the afternoon session, the PM session. But those are three demand zones. We have one supply. We need two more supplies. Right here, look at all of this selling right here, all of that selling. Where did that selling start? It started at this green candle. Always that previous opposite color candle. We go to the top of it, to the bottom. You see, we're not including this. We're not including the bottom of that, because you gotta think, if this bottom went all the way down here, like this whole thing it wouldn't be a zone. You see, it's just that right there. Now, if the top went up, then yes, we would include it. But that's a supply zone right there. You see that? Now, was it respected? No, but it was invalidated. It was invalidated. So that's two supplies. Hold on real quick. Okay, yep. So that's two supplies. We need one more. And like here, there is a bunch of selling going on. So you're gonna have a few different ones. Definitely here. This is supply. You see all this selling. That's supply. See, that's supply. Now the box doesn't have to go out that far. I mean, you could keep it within, like that. You could keep it like that. The market just kept going, never came back to that until all the way out here. By this point, like, yes, it's a supply zone, and it actually, I mean, it held. Look at it, it held. But I wouldn't always expect it to hold, just because that's old. At that point, like, it left, a while passed, and then the market tapped. So it's not a fresh zone. It's not fresh. I mean, and even you could look at the time, like here, this was on the 16th at 2:45 a.m. This is at 8:55 p.m. That's a whole different trading session. It held. So you have to be aware of these zones, but they're not always going to hold, especially if they're old. I would try to keep all of the zones within the same trading session. That would be good, at least the same trading session. But do not ignore zones that have not been broken. If a zone has not been broken, please do not ignore it, because you could pay for that. Yeah, oil is just buying right now. Like, oil is going crazy. It's not 9 o'clock yet. We'll see if we have an opportunity to buy, because oil usually, once it picks a direction like this, it usually just keeps going and going and going. So we'll see if I have a chance today to get in, and I'm going to post my setups. So whoever's in the Discord, if you want to take, and I don't even recommend nobody taking my trades, like, just because they can win, they can lose. I have a specific way of executing that. If I lose, it's going to be just a little bit. Not everybody's going to know how to do that, and you might end up taking a bigger L. So, I recommend you taking the trades that you understand and that you have a plan for, that you know how to get in, get out. And if you're not there yet, that's okay. Hold on. Okay, yeah, sorry, I didn't want to cough in your ears. So, okay, reading the comments. Bashi says supply is for sellers, bears shorts. Yeah, supply is selling, demand is buying. Supply, selling, demand, buying. And demand is for buyers, bulls, longs. Yep, I still get it blurred. Gotta go refresh these lessons too, like Santana. Yeah, demand, like when there is demand, it's because a lot of people, if something is in demand, it's because people are buying. Like when the iPhone, you could think about the iPhone. When the iPhone is in demand, it's because a lot of people want to buy it. A lot of buyers want to step in. So demand, there is demand, there is people want it. So if people want it, the price of something goes up. And if there is a lot of supply, let's just say that the market just put out a bunch of iPhones and way too many, then let's think about it as like eBay. On eBay, if there is a bunch of competition, there's a lot of supply for one product, for an iPhone, then, or whatever it is, prices tend to go down. So when you see selling like that, there is a lot of supply in the market, there is a lot of sellers. So, you know, the market will keep dropping. That's what it is. So yes, Vashi, you got it right. So that was supply, that's 2 supplies. I need one more. And a key thing is that for supply, I'm going to look for selling. Look, now this is supply, but these zones, like if the candle that starts the zone is too big, I will definitely, you know, I will create the box, but I'm not trying to take a setup there. It's too big. A zone that's too big, you know, it's gonna fake you out most likely. So I don't take zones that are too big. By that I mean that previous opposite colored candle, that different color candle, you know, it's too big. Like if I was to do this, like that zone is huge. Like come on, like a zone can be too big because the candles, you know, it could wick it, but then it could go in, and then from here just drop. Like I don't trade zones that are too big, because at that point, in my eyes, I don't have a zone. This is perfect. Look at all this selling going on. This right here is a supply zone. It got broken. It happens. It's called a zone being invalidated. This zone, it tapped, never broke the candle. This one never broke that previous candle. This green one did not break this red one, and then this green one just took off. This zone was it was invalid. This candle right here invalidated the zone. You would have not took this if you were waiting for the break of the candle. So that's okay. It's still a supply zone, but the market didn't care, blew right through it. But that's the third. So we had 3 demands, 3 supplies. Does that make sense? Of course, you gotta practice this. Like I could draw a bunch of them, and you still gotta practice it. And this is for everybody. You still gotta practice it. It's a skill. Like I had to get on the charts and practice. Like, you know, here I see supply, boom, the supply zone right here. Like this thing, please just practice it. Look, boom, big drop, supply right here. You see that? Mainly, I would just look for the big pushes. When you have a push to either direction, just look for the zone where it starts. Boom, another supply zone. Yep, I just cover the previous opposite candle. I just, you know, I cover that. I don't get everything, right? We just get that different color candle. That's it. Boom, a big push to the downside right here. Supply zone. Now that's too big. I will still definitely put the zone, but would I take it? Most likely not. If it's too big, there's supply right here. You see that? Like it's all over the market. This is why I like supply and demand. It's all over the market, and we have a way to validate if the zone is valid or invalid. So it's not like, oh, you're just drawing a bunch of zones, you know. There's another supply zone right here. Boom, big drop. Did the market come back? Not during that session. Would I take it in a different session? No, because it's too old. But does that make sense? Does that make sense? Let me see. The one stop trader trade worked out yesterday, huh? Look, good morning, y'all. Yeah, the trades that worked out is the ones that I forward tested. Like, I'm always gonna be open with y'all. The 2 trades that I forward tested, they both worked out. I didn't take them because of one thing or another that I didn't like, and they were valid. Like, if I would have took them and won, I would have not been disciplined. But those 2 trades worked out. The one that I took, the entries I took, they did not work out. I have that on the Discord. Again, I do, let's actually go to my losses. So let's see. Yeah, no, it was this one. It was actually this one. I took this resistance setup yesterday that bounced off the 50 EMA. You see this, like, it rejected here, and then, but the thing is that he did this, rejected it again, went in, boom, pulled back. So that first entry, and that was fast. Like, I don't know what the heck happened. It was no news. Like, the inventory news had already passed. But this happened all across the board. Like, the S&P 500 and other instruments, they just had random volume. So that random volume took me out the first time, and then the second time it took me out again. And even though, look, it was another rejection of the 13 EMA, boom, took me out. Like, it actually took me out before it went down. So my entries failed, but that's okay. Look at my stop loss. Like, my risk to reward right now is crazy. Like, I explained this on Discord. I don't really get into it on YouTube, because if you just try to do this without understanding what I understand, like, it's gonna be hard to be profitable. But if you understand, it's literally a few things that I talk about on Discord. If you understand those things, it's gonna be easier. It's never easy, right? It might be simple to understand, but it's never easy. You still gotta know how to execute. But if you understand those things, you can make it work. My account right now is still, like, for the month, is still in profit. Like, that's the crazy thing. Like, even with the losses, it's still in profit. That didn't happen in the past. So we're definitely heading in the right direction right now. Yep, ouch. I know, bro. Yep. Let me see. Reading Santana. When it comes to supply and demand zones, do you wait for a full candle to form out of it to take this to take the trade? It's in the course. Pretty much, I wait for the market to come back. Like here, it has a push out of the zone. It needs to come back. It needs to come back. Now, technically, after it comes back, as long as it doesn't invalidate it, and it starts going back up, like, you could have candles closing inside. You can, as long as they don't close outside, as long as they don't wick the box, they can close inside. But then you have to wait for the entry signal. The entry signal is the break of the previous candle. If you don't understand that now, just keep going through the course, because it's there. But it's gonna be the entry. It's gonna be the break of the previous candle. When that happens, boom, that's when you enter. That's when you enter at that point, and you could put the stop loss below the zone or right under the wick of that candle. And that's it. You go for your 1-to-1 as a first target, and you put a runner. So for a runner, you need at least 2 contracts. You need the first contract to close at 1-to-1. The second contract, you could go for whatever risk reward, targets you want. Just make sure to bring the stop loss above, like, I would say a little bit above break even, because there are fees. So you want the market to cover those fees. If it was to pull back and hit it, I go a little bit above break even, and that's it. You could go for a 1-to-2 or let it rock out, like, as far as you want. You could then keep trailing it, right? Keep trailing until the market stops you out. That's another option. But everything has a pro and a con. So now, do I take trades that where the candles close inside? I don't like taking those as much. I'd rather see a full wick. I'd rather see a full rejection, and then get the break of the candle, and I get in. Those are the trades that I get in, the most. But sometimes, I'm not saying I don't take the ones that close inside. I gotta have a good reason for that. push out of the zone, retest but not invalidate. Yep. Then move out and break the previous candle. That is the entry trigger. That's it. So that's what it is. The market is retesting this zone. It needs to retest it successfully. If it breaks it, if it goes past it, that zone did not hold. And listen, you're gonna have times where the market is gonna break that and then still go up. Now, why is that? Why does that happen? Well, look at what you have here. You have rejections. Hold on, I'm getting a cramp on this arm. All right, hold on. Let me stretch that arm real quick. Hey, I'm live. I'm a father, right? To a toddler, and I'm always gonna be a father first. And I know you guys understand that, and I love that. Like, you guys really are supportive. I love that, honestly. But when that happens, I don't just give up on the setup. I look and I ask myself, is there support here? And sometimes, look at this, you have support too. So if that happens, the market actually invalidates the zone right away, I get rid of it. Let me just clean this up a little bit. I'll leave that one. Right away, I get rid of the box because it's no longer a demand zone. But now I see if it takes liquidity. If this candle wicks and it goes past the previous longest wick and it goes back up, that's something I could take. Let me check on my zone real quick. Hold on. And yes, like that happens. Like if you have support, and even if it doesn't grab liquidity, even if it's just support, it could still boom, like bounce off the support and go up. Like that can happen. You know, I'm letting y'all know because I've seen all of this already. I've seen it. You know, I don't just give up on the setup. If the zone gets invalidated, my next question is there support? And if there is support, I watch for my favorite thing is to watch for a liquidity grab. I need the market to wick past, you know, the lowest wick right here. I wait for that. And once it goes past it, if it wicks it, if it goes up, I go in for buys. Hold on real quick. So yeah, but that's the liquidity grab. I'm gonna make a video on that because I haven't really made videos explaining liquidity grabs, you know, and a liquidity sweep. People call it a liquidity sweep. Same thing, different names. But I don't just give up on a setup. That's all I'm gonna tell you. Like, if a zone gets broken, I try to see, okay, boom, why did it get broken? Is there support? Is there resistance? Is there liquidity right below, right above? Like, I ask myself these questions and I get ready for the move still. Like, that's something I do. Avashi, you said, I know I saw something here. You said, I saw that yesterday. Market plummeted down through the zone. Yep. Came back up through it and went up. The market do what I do. Yep. And sometimes, you know, not all the time there's a reason. Like even that trade I took, it took me out. I still don't know the reason. I went on Truth Social to see if Trump tweeted anything. Dusk from Discord, he did mention something. He did mention that there was some news that came out pretty much about Trump saying that he was gonna find a way to fire Powell. And Powell is somebody that holds a lot of weight in the market. But that might have been it. You know, sometimes news like that will shake the market, but not all the time there is a reason, or not all the time we could just know the reason. So, but I will try to see if there was a reason. Is there liquidity? Is there support? Is there resistance? Is the market grabbing money from, you know, from an area to then make the move anyway? So the main takeaway is, don't just give up on that area that quick, because there might be something else in that area. Don't just give up that fast. Don't just delete the zone and be about your day. Ask yourself, is there something else there? Reading the comments. That's one of my questions, is about liquidity grabs. Yep. I'll make a video about that. I'll make a video to really explain it better. But yes, Avashi says, Sometimes a liquidity grab just looks like a random big spike in PA, in price action, in an opposite direction. You're right about that. And sometimes it is news reactions. And the news could be literally like just from social media. I'm not like, there is a thing called true social trading, or, you know, Trump trading. Like whenever he says something, you know, if it impacts the market, people are going to trade that. So there is such a thing. Like I don't trade news. I just read what the market is telling me. For example, a big spike like this, that might have been, you know, it might have been Trump saying something. I don't know, right? It might have just been normal market behavior, just the buyer stepping in, institution stepping in, like whatever it is. I don't know all the time, and it doesn't matter. I'm gonna read what it's doing. For some reason, there was demand here. For some reason, well, when the market comes back and retests that zone, I'm gonna see if it holds. If it holds, I'm gonna wait for my entry signal. What is my entry signal? The break of the candle, and that's it. Like that's really it. The Epstein files. I guess it depends on who is on that list. If we have people like that affect the market on that list, then yes, that's possible. I guess if Powell is on that list, yes, that I think that would definitely, like, honestly, like, I know it sounds funny, but something like that might affect the market. Big demand, big demand for the Epstein files. Well, I know there's demand in the culture. There's demand for that. The market wouldn't necessarily have a demand for the files, but maybe for whoever is involved in there. I always say the clowns, not the clowns, are a huge part of the circus. Their job is to change the vibe. No, I love that. I mean, I know that when I'm locked in, like, it may seem like I'm serious, but I can't say I'm funny. I'm not gonna say I'm funny or anything like that, but I definitely like to laugh. I like to laugh. You know, I've been in places in communities and everything where the vibe is just always strict. I get it. We're trying to make money and everything, but I'm always up for a good laugh. So thank you for that. But yes. And let me ask you, I don't come off like as this serious guy. I don't think so. I don't think I come off like that. I'm not saying this because y'all said anything like that, but I don't think I come off like that. But anyway, yeah, this is it. That's all I have for you guys. Any questions, any comments? We actually had like 4 or 5 people here consistently staying strong. I do want to thank you all. I do have a video coming out. You know what? Before we go, let me give y'all the sneak peek. Let me show y'all what's coming today. I recorded yesterday. I'm not gonna lie, I wanted to drop it yesterday, but I had to schedule it because by the time it uploaded, it was almost 1 a.m. So I already know 1 a.m. like most people are gonna be sleeping, at least in the US, and you know that's just not good for YouTube. But let me show y'all real quick. Oh, you said you meant on the charts. Yeah, all right. So here. Listen. This is what's coming out today. This was coming out. I know I'm not showing it just yet. It's gonna be this one here. This is one of my like walking videos. I love making these walking videos. I had a lot to get off my chest. It's something preference burned me out. Here's why I walked away. I do open up here. All I'm trading right now is my life account. I love it. Like, there is clarity. I'm not going to talk about it full blown now, but just know that it's like, sometimes when you have 2 paths, like when you have 2 paths, it's like one becomes a distraction to the other. And no matter which one you pick, if you have the other one in mind, there's always that what if, there's always that distraction. But obviously through experience, things just became clear to me. And there was one event that happened that really just made it clear for me. And I said, you know what? That's it. Personal account, personal money, personal funds. That's it. That's my way. Like, I'm not saying this is for everybody. Everybody's gonna have a different path. This is just my path. I talk about it. I'm not gonna, spill the beans here, but this is gonna come out today at 1. I believe it's at 1 p.m. So Eastern time, New York time. Definitely keep an eye out for that. If you could watch it, if you like what I say, just if you could like the video, that's gonna help the algorithm push it. So I would appreciate the support only if it benefits you. Like, I'm not, at the end of the day, I'm trying to create content that brings value. So of course, I'm not gonna ask for something that's not earned. But if you think that it brought value to you, definitely, give it a like, share it. That's gonna help the algorithm, all of that stuff. But more than helping the channel, I hope it helps you. That's really it. If it's not helping you, it's probably not gonna help other people. So I do think there is at least one thing that I said there that might benefit you, even if you go with prop firms, but that's it. That's all I have. Let me read the comments. And yes, because people move price action as reaction to social sentiment. Yep, it was happening in the world around the charts. I got you. I got you. I got you. But listen, thank you guys. I will be on Discord. I'm not gonna be live on Discord until there is a setup for me to take. So I'm actually gonna get off the stream right now. Boom, I just did that. So when there is a setup, I'll show up, and just pay attention to the live stream channel. That's it. That's all I got. Thank you for tuning in. Thank you for watching. Thank you for engaging. I appreciate it. I love it. This is Yo Javi. The world is yours.